Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'm going through the comments section. I know you guys have questions and I want to answer those questions. I think they're extremely important. Again, this is my opinion. Doesn't mean I'm 100% right. But one of the questions is, please explain why Apple or Facebook or Microsoft shares will fall, or FANG in general, when they are performing so well. I know prices are extended though. The reason I think they're going to fall is because we're going to have inflation, which we're having right now, and interest rates chase inflation higher. When interest rates go up, the price to earnings multiple goes down. People are not as willing to pile money into the technology sector and drive the price to earnings ratio higher. So when interest rates go up, they're less willing to take that risk. And what happens is they sell technology companies and take the lower risk bonds that pay higher interest rates. But it depends on how high the interest rates go. The higher the interest rates go, the more pressure it's going to put on very large PE multiple stocks. So when interest rates go up, and I have a video completely on this. You want to search, I think, I'll put it in the comments section below here, of why interest rates going up demands a lower PE ratio. And I have the scatter plot analysis, and it's a linear line basically going down as interest rates go up, PE ratios contract. So that's why. It says, why is gold not performing when interest rates are going down? So real rates are going down. That's what really affects it. And we've got this big move down. And I think what's happening is that the Federal Reserve is buying 10-year bonds possibly, because it's just going sideways. It's like a muted move. Very rare to see something that does that. Usually if you break an uptrend, it wants to go down a lot. And we're kind of just sitting there going sideways and barely down. I don't know if they're in there jacking around, but eventually I think we're going to see a snap higher in gold and silver. It's going to be a big move. So it's like we're waiting. People are trying to figure things out. And then once it figures it out, you'll see this big rotation of money into gold and silver is my guess. So I think it's just a matter of time. And if the dollar doesn't remain robust, if it drops out, when the dollar, I shouldn't say if, when the dollar drops, they're printing money like heck. We have inflation. Dollar weakness happens when you have inflation. We broke the big uptrend. When that drops, you're going to see commodities go up a lot. And that's where that rotation of money comes. It's going to come from bonds and stocks. How will the small business close in America? The charts go down, small business go bankrupt. What will this do? This is not looking good for me or the future. This is a big thing for the economy. Well, so that is deflationary, is what you're describing. And what the Federal Reserve is doing is they're printing money to fight the deflation. They're literally just sending checks out and they're fighting this deflation that would naturally happen or potentially could happen. Now, we've got this weird dynamic going on. Inflation usually happens when you have a real estate boom. It's when you go into an expansion phase of real estate. That's where we're at today. That's usually inflationary. We had a very short-term kind of deflationary bust because we shut everything down. I don't think we're going to have a crash anytime soon because the real estate market is incredibly robust. If you see the real estate market go, then I would worry. The real estate market is what causes these deleveragings. So if you're going to see a big crash, you got to keep your eyes on real estate. Look at inventory, days on the market, and prices. Those three things. If days on the market are low, prices are going up. And if inventory is low, everything is in check. I don't think you're going to see a big, huge deflationary crash. That's me. That's my take on it. Because that's the gateway of how money gets into the system. What percentage of your wealth is allocated to precious metals in order to protect your future purchasing power? The rule of thumb is 5%. I am crazy, and I put probably 20 to 25% of my overall net worth in physical precious metals, just because I'm crazy. So that is something. And it says, what are some of your most leveraged silver, gold mining companies that you like? And I'm going to replace leveraged with risk-adjusted companies. What companies do I think have the greatest returns per the risk that I'm going to take? I like Ely Gold, which got bought out by Gold Royalty. I like Teuton Resources, TEUTF. And I like the mid-cap silver companies. EXK is my favorite. MAG, AG, and HL. Hecla, First Majestic, and Mag Silver. Those are my mid-cap silver producers. And if you want even less risk, you can go with a well-diversified larger company like a Wheaton Precious Metals or a Franco-Nevada. Those are the ones that I like. You get too much into the exploration companies, and now you're just rolling dice. I mean, you're going to get this huge move. You know the move's coming. And if you're going to get this huge move in silver and gold, why are you going to take a company that may or may not find something? It's too much risk, in my opinion. And a lot of these companies, they don't work. I mean, they literally don't find anything. So they're not going to have any value. I would stick with those ones that I like right there. What's a better stock, BNNLF or NGEX? I take a basket approach, and I think uranium is a very good area. NGEX is a very small copper exploration company. They are good too, but I like spreading my money over a bunch. So I don't just sit in one thing. I buy a bunch of a whole bunch of other, companies. So I do a basket approach. It's not one or the other. It's if uranium's a good sector and you have, like 10 grand, I would probably buy $1,000 in 10 different companies and do something like that. So I would own a basket approach. It reduces risk. And if one of these companies has a problem, you're not stuck in one of the companies with a bunch of money. That's the way that I view it. So I'll cut it off there. It looks like, I like all the questions, guys. Thank you for all the questions. I'm going to try to answer the majority of these. And there was another question here. A lot of people want to talk about news. News will not affect this big structural move. News, I think, is just more. It's taking your eye off the ball. You're losing focus. Think of big picture things. There isn't any news that's going to, change this big picture. I mean, it's going to have to be drastic. You're going to have a nuclear fallout, like an explosion or something happens to ruin the uranium, the uranium move. You're going to have to somehow have the Federal Reserve stop printing all this money to have a deflationary crash. I don't think we're going to have it. It would completely screw up the tax revenues of everything if we had a long-term deflation. So I don't think we can have that. And all this other news, it's all short-term blips of you don't want to be too focused on it. It's not going to get you anywhere. So that's my viewpoint on news. It's almost a waste of time to even look at it and read it. Look at the big trends, look at the big picture views, and once you start to really understand the structural moves of technical analysis, that the little news, the day-to-day news is just garbage. It's no big deal. Assets are cheap. You buy them when they're cheap, and the news doesn't matter. The news will follow. They'll make up stuff. Don't worry about it. That's what I've noticed. You guys, if you like this content, give me a thumbs up. If you have any other questions, put it below, please. And thank you for listening. This is Finding Value.